Hello, my name is Ben Blanks with Three Rivers Mortgages, a division of Hamilton Group Funding. I appreciate your time today, and I want to go over a few things that I think may help your process. We're going to talk about what loan officers see in the mortgage side of this process and what slows down getting to closing on time and close on time. Now, this is from the mortgage eyes, not the real estate eyes or the consumer's eyes, so it's a little more in depth in what happens. So I'm going to try and keep it as an overview of things that can help us speed this up to where we got a few days before closing to review paperwork instead of the day before. Now, the first thing starts when we take the application. Well, we've got to be able to meet with that bar. Typically, we'd like to do that within the first 1 to 2 days of the contract being written. In addition to that, the main delay that we see is getting the information back from the bar that we request. Some of this information is vital to us to even knowing if he's going to be able to, or he or she's going to be able to qualify for this house. We need pay stubs, we need W-2s, we need tax returns. One of the main hang-ups are individuals that may own percentages of other companies, and they don't have a complete set of tax returns for something they own 25% of, or they don't have it together and they got to call their accountant, and then we have to get the authorization from them from their accountant to send it to us. And everybody needs to understand that in today's society, no one's going to release information without signed authorizations or verbal authorizations, especially CPAs. This has been a big hang-up recently, and it's not the CPA or the accountant's fault. They have the same restrictions that everybody does. They need to have the bar's authorization to release information. So that's the one thing I see. And then when we get the information, not all the time, but sometimes when we read through that information, it may prompt another question, which means we need another document to verify something. Happens repeatedly on bank statements. So again, at that point, the bar's like, well, I'm giving everything to you, what more could you want? It's not the individual loan officer needing this and just wanting to be inquisitive. It's the government restrictions that have been put on us for anti-money laundering, red flag. We must explain everything. And we have to do that with usually two verifications, two different verifications. It's just the mortgage world we live in, so we need to educate everybody ahead of time on please be proactive, not reactive through this process. The next thing is we start with the appraiser. Now, the appraiser is going to get this request from us once we know that we've had authorization from the bar to order the appraisal. Most bars would like us to wait till after the home inspection's been completed. Well, now we've got to wait on the home inspection time, and if there happens to be repairs, negotiating that back and forth between the buyer and the seller, which I would strongly recommend before we spend money on appraisal. But in doing that, we've lost valuable time. So if we're looking to try and do a 20-day or 30-day close, and the home inspection isn't completed for 5 or 6 days after the contract date, and then we need another 3 to 5 days to negotiate who's going to pay for what repairs or what are going to be done, we've just lost almost 2 weeks in a 4-week process before we can order the appraisal. Now, when we order that appraisal, because of the way appraisals are ordered nowadays, it's not like I can pick up the phone and call the appraiser directly. I have to go through a management company. So in doing this, I have to go to a third-party, non-interested company, or in our case, uninterested party inside of our company that orders the appraisals for us. The appraiser typically will take between 4 and 8 days to get us that appraisal. Now, that is if they can gain access on time, working inside their schedule, making sure when they do gain access and they do the appraisal that the electricity is turned on, that the water is running so they can do the inspections required for them to finish their appraisal. If it's not, they're still going to finish the appraisal, and they're going to state these things were not accessible, meaning that I have to get what's called a final inspection. The appraiser is going to have to go back out there and verify that the electricity does work, that the water is running, which is going to take another delay. So in doing this, you can see we've almost eaten up the entire 4 weeks just waiting on the inspection and the appraisal. Now, while the appraisal and inspections are going on, we are still talking back and forth and communicating with the bar to gather all the information. But we cannot send the file to underwriting until we have the appraisal and everything to make sure the value is there. Now, as we go to underwriting, there's always could and possibly is conditions or questions the underwriter may have about the file. While that's going on, we have the attorney who is searching the title and providing title insurance, title searches on the property itself. Again, if there happens to be a title issue at the very end, if we don't get the title work ordered fast enough, if the attorney doesn't have enough time to do it, some attorneys take 3 to 4 days, other attorneys can take a week and a half to 2. There are a number of moving parts in this transaction, and every part can stop it, slow it down, or cancel the transaction. It is vitally important that everybody understand that time is of the essence. We don't have to rush through this, but we cannot afford to lose a day or two waiting on things, or having maybe a little conflict on why you really need this. I don't want to provide that. Unfortunately, the borrowers have to provide us the information requested, or the loans won't be approved. So we just need to make everybody educated and understand what's going on. And remember, we have multiple moving parts in this process. Those are the normal things that stop closings. Now, you have other things that come up that you really cannot, no one can affect, no one can see. We had one where the borrower lost their job before closing. We had another one where they went out and actually purchased on loan furniture for the property. Well, we tell all our borrowers that before closing, usually within the last 5 days before you close, we're going to run another credit report to make sure there's no inquiries or new debt on the credit report. We're also going to do a verbal verification with their employer to make sure they're still working, that they haven't quit their job or lost their job right before closing. So there's a number of things that come up with this. I hope this has been helpful. My name is Ben Blanks. I'm with Three Rivers Mortgages, a division of Hamilton Group Funding. I really appreciate your time today, and thank you.